Well, welcome back. Markets are back in record territory this morning, up, reversing earlier weakness. We've had a real winning streak with the major indices hitting all-time highs yesterday, the Dow, the S&P, and the NASDAQ, and they are headed toward further uncharted territory this morning. Amid U.S.-China trade optimism, Chinese officials and their American counterparts agreeing to talk more toward a phase one trade deal. They had a phone call apparently overnight. Joining me right now is the former chairman of the Federal Reserve, the co-author of the book, Capitalism in America. Dr. Alan Greenspan is here. Dr. Greenspan, it's always a pleasure to see you. Thanks so much for joining us.
Well, thank you. Nice to see you, too. So
what's your take on the backdrop in terms of the economy? Are markets getting it right here, where we're hitting record after record in terms of, basing what they obviously see as a strong backdrop? How do you see things?
Well, I read it by the fact that there's an ever-increasing expectation that the issue of tariffs and the tariff wars are going to get resolved, because there's no question that the type of tariff structure that we have had and the customs that are flowing in has been a significant deterrent to economic activity. And if the Chinese-U.S. relationship, which is the major one by far in the world, can come together so that there's a maximum amount of interaction and trade, the expectation is that the economies will rise faster, and it's reflected in the stock price.
Yeah. So you do think that a deal will get done, because it has to get done, because these are the two largest economies, and it's good for both economies, is what you're saying?
Well, it's good for both economies, but you're asking me to make a political forecast, and these days those are not the easiest things to do.
Let me ask you about your take on manufacturing, Dr. Greenspan, because I'm looking at a report right here from Cornerstone Macro, which is an independent research firm headed by Nancy Lazar. And Nancy writes this week, the U.S. ISM Manufacturing Purchasing Managers Index is likely to move up to 52% over the next several months, indicated by our models. She's expecting the ISM and global manufacturing purchasing managers are turning up. She thinks we've seen the bottom. What do you say?
I suspect the same thing, but let's remember that the very long-term outlook is no better than it's been recently, and if anything, it's gotten worse. But it is the case that there are indications in the short run that the economy is coming off its dullness, if I may put it that way. Not that it's going to rocket forward, but it's holding its own, and if anything, it's better than so far better than I've expected.
Okay, so where will the rebound be in your view? Is it manufacturing? Is it the capital expenditures? CapEx is one area that has been under pressure because of what you just said, the trade uncertainty.
Yeah, it's basically both. The key is capital investment, and the reason is that the decline in the rate of growth in capital investment has been the significant factor causing a dullness in the economy. And so it's capital investment first. Manufacturing is, remember, a declining share of the recent market in many cases, because high tech has been more service than anything else. And as a consequence of that, how you classify things is sometimes slightly arbitrary.
You used to talk all the time about the wealth effect, Dr. Greenspan, where when the stock market goes up, people feel wealthier. And that is a cycle. They spend more money, they're feeling better, the wealth effect is real. Do you see a wealth effect now that we're seeing all these record highs in the major indices?
Well, the one thing we see is that stock prices, a 10% rise in stock prices statistically creates a 1% rise in the GDP. So it's basically very clearly in the data. And so as the market rises, in a way, it's self-perpetuating, at least in part. And when you couple that with the trade data problems that we've been having, then you can see that we're getting on several different sides an increase in the underlying forces driving world economies first and ours next, because up until now, it's been pretty miserable. The U.S. has been at a 2% annual rate of growth, which is really quite unusual for us.
So we're going to...
Europe is doing more poorly.
So we're going to get the GDP tomorrow, actually, another reading, and the estimate's 1.9% in growth. Are you saying you're expecting the GDP numbers to start increasing and looking better?
Well, the 1.9% is basically an indication that we're stabilizing. We're not going down further. This economy is not about to run away on the upside. But I think that the presumption that it's going to sink into a recession, which means negative rates of growth, I think is very premature at this stage.
So perhaps it's the right move to stay on hold at the Fed. I mean, Fed Chairman Jay Powell last night said that the central bank cut rates due to the bearish view on the economy, but that the economy had, quote, less momentum than originally thought, but now they're basically on hold. Do you agree with that policy?
Yeah, I think that's not an unreasonable view of the way to look at this. If we were going into a recession, we would be accelerating on the downside now, and we are not. And one of the reasons, as I mentioned earlier, is that when trade picks up internationally, it's very important. And remember that the vast amount of merchandise trade is China shipping net to the United States.
Yeah.
Remember, the two of them are 40% of the world GDP. So you have this extraordinary set of pressures arising that when trade overall starts to look better, then the global economy looks better.
Yeah. Sounds like you've got some optimism about where we are in trade as well. We're waiting on a China deal. And of course, USMCA is the other outlier there. You've been in that hearing room before when the Congress really likes to hear themselves talk. We're looking at that over and over again in so many different areas. In terms of USMCA, how big of an impact would that have on the economy, Alan, real quick, before you go?
I'm sorry, how big?
How big of an impact would a passage of USMCA have on economic growth?
I have no idea.
Okay. The USMCA is expected to create 200,000 jobs, if you listen to Peter Navarro, who said that this weekend at the White House. But Dr. Greenspan, it's always a pleasure to see you. Thanks very much for joining me this morning.
My pleasure, Marianne.
We will see you soon. Alan Greenspan there.